Hi guys, Steve Stinson at Keller Williams Realty. Welcome to our August market report. Yes, the market is cooling down some, as you've seen in some national news. Is it cooling down in the Huntsville area? We'll take a look. And yes, Huntsville is in the news again, and it is going to affect your real estate prices. Stay tuned for this report. Yes, it's August already. Over half the year's over. Before you know it, we're going to be playing football. Roll Tide, by the way. All right, let's go get started this month. July results out from HAR. As you can see, 930 homes sold. Almost exactly the same number of homes we sold last year, but that's not the issue. The issue is the homes on the market. Now, if you remember the last couple of months, this is a significant improvement from the last couple of months. We're still well below where we should be. As you can see, last year, over 1,000 homes on the market. Last month in July, 647 on the market, but we've got 696 pending sales. July a year ago, 930 sales this year, 929 sales last year, almost identical. But again, 1,000 homes on the market last year, 647 this year. Now 10 days average on the market. Last year it was 22. But look at these home prices. Home prices up 20% from a year ago. Average $332,000. This is Huntsville and Madison County. Now, so this is not just Huntsville City or Madison City, but it's Huntsville, Madison, and Madison County. $277,000 last year, up to $322,000 this year. Congratulations, homeowners. Now, this is what we're starting to look at. We've talked about this for three months in a row now. We're looking at inventory. The market has cooled off a little bit. We're going to go through a couple of slides here so that it looks like April and May have been our peak as far as the white hot market. The market is still very hot, but it is slowing up a little bit. You can see here that inventory dropped drastically in May, and we stayed down around that level. This is Huntsville City, around that level for May, June, July, but you can see a pretty nice uptick in this chart for the last 6 weeks, 8 weeks. And that's what we're noticing in the market, a lot of homes coming on the market. Something else that we take a look at when we're trying to determine if the market is turning, how many times people having to decrease their home prices. Sellers got pretty optimistic. A lot of homes went on the market. They may have been overpriced, thinking that the market was going to continue to be as hot as it was earlier in the year. You can see an uptick from April and May in the number of price decreases in home on the market. So if you flip this chart over, this points again to a peak in our market around the April of May time frame. And the further we get away from this point, the easier that'll be able to see. Our action index is still a strong seller's market, 68 as of the 19th, which is today when I'm recording, but a little bit less than this time last month. So it just illustrates again that the market is slowing a little bit, but it is no doubt still a very strong seller's market. Here's the peak of the market action index, again, last between April and May. You see it peaked up here at 100. That's as high as it can go. And it did feel like when we were out in the field that April and May was just a crazy, crazy time. We were getting 20, 30 offers on homes, 10% over list, 10 or 15% over appraised value, waiving home inspections. It was really crazy and really difficult for buyers and very frustrating and nerve-wracking for sellers too. That has slowed down some. In the market recently, last couple of weeks, instead of 6 or 8 or 10 offers, maybe you only have 2 or 3 offers. Fewer people going over appraised value. We still have a lot of folks that are waiving inspections, a lot of cash in the market. Still have a lot of cash buyers out there, so if you're competing, that's who you're going to be competing against. Question we get all the time now, prices have really skyrocketed up in the last 12 to 18 months. Is this a bubble? People remember the bubble we had back in 2005 when prices crashed after the market peaked. Is that going to repeat itself? It's not the same situation that we had back in the 2005, 6, 7, and 8 period, because at that point in time, if we've talked about different metrics on different reports about why it's different this time. I used to spend a lot of time in the financial services industry. I know you hate to hear somebody say it's different this time, but let's take a look at a couple of charts. Number one, mortgage credit quality. Look back during right before the bust in 2006. mortgage originations for people with below 620 credit scores. Now that's a high risk on a home loan. If you'll remember, at that point in time, it was the government's ambition that everyone in the United States would own a home. So to do that, they gave everyone in the United States a mortgage that wanted one. If you could fog a mirror, you could get a mortgage. No doc loans. You don't have to turn in any documents. No income requirements. No asset requirements. Just sign here and move into your home, start making the payments. Well, what happens, a lot of people got into homes that shouldn't have been in homes, and then we had the crash. Then we had too many homes on the market, and then that's when prices really tanked. This time is quite different. Cash out refis down 60% from the same period back before we had the last crash. Credit's a lot tougher now. The main reason we're having this rise up in prices right now is because we simply just don't have enough homes to sell. You can see from this chart that the new homes completed 12.6 million during that period or decade of the bust. What happened when the market bust, about half the builders, a third of the builders went out of business. New home construction dropped significantly. They were very timid and stayed timid for the whole decade. They underperformed as far as new construction for the last 12 or 13 years. So now we're in a position where we just don't have enough homes for the number of people that want to buy them. The big difference is that the bubble was fueled by risky loans and risky underwriting. And today, I don't know if you took a mortgage out during that period of time, but if you've taken a mortgage out in the last couple of years, it is very difficult. A lot of paperwork, a lot of documentation. It's significantly different than it was back in the 05, 06, 07 period. But yes, Huntsville is one of the top cities in the country with a housing shortage. Here we are at number 13 on this chart, right below Nashville. So yes, things are getting better, but we are still in a severe housing shortage, so prices are still going to move up. As we looked at last month, they should not be moving up at 20% a year. That's just not sustainable, but we do expect them to continue to rise, but rise at a more normal rate in the 3 to 5% range like they have historically. Huntsville in the news again. Of course, the big news the last couple of weeks was Huntsville's now the biggest city in the state of Alabama. Now, we're bigger the city than Birmingham, larger city than Montgomery. The Birmingham metro area is 7 counties. The Huntsville metro area is 2. So the Birmingham metro area is still huge compared to our metro area, but as far as city population, now we can say Huntsville is the largest city in the state of Alabama. A new article, new research coming out. Also, Huntsville is a great place to buy rental properties. Top 10 cities where it pays off to buy long-term rentals. Here's Huntsville at number 8. So all this national attention, that's what's bringing in all of these investors with cash. And that's what's creating such a problem, especially for our first-time home buyers who are trying to get their first home, maybe homes priced below $300,000. It is very competitive because most of the time there's a cash buyer in there wanting to make a purchase. We now offer through Keller Williams a new service. If you're thinking about selling your home, we can put you in front of those cash buyers that I was just talking about. These are national buyers. These are not wholesalers that are going to make lowball offers. These are not flippers that are wanting to buy your house and fix it up and resell it. These are investors that have a lot of cash, and they're buying homes, and most of the time they're going to buy them and turn them into rental properties. So why is it an advantage for us to do that instead of you? If you use us as a screen, we can present your property to those buyers, and you don't put your name and email and phone number out on the internet, because if you do that, you're going to just be bombarded with spam and phone calls. We can do it for you. If there are offers out there, we'll present them to you. We can present that with Keller Williams' own cash offers. We are buying homes in the Huntsville market for cash now, and we can show you what that process looks like. So if we can help you with any of that, let us know. And if you have any questions on this particular report, give me a call, put a comment. The link for the cash offer program is in the description below. You can just go to that link, put in name, address, give me a few pictures. We'll get your home presented and then give you the results. Thanks for watching. We'll get with you next month on the Market Report. Have a great week.